Hello and welcome back to another episode of the Daily Crypto Byte. Today is Friday, April 22nd. Congratulations on making it through another week in these crypto markets. It was a volatile week, went up and retested 43K. Now we're back down at around the 40K level. Turned around yesterday when Fed Chairman Jerome Powell made some comments at the IMF and World Bank spring meeting. Obviously, just talking about an indiscrepancy between supply and demand and how they, as the Fed, can address that. The market turned back on that, but we'll still talk about some price levels, take a look at some various assets. Excited to dive into things here as we wrap up the week. Before we get started, CJ, how are you doing, my friend?
Doing well, Monty. Thanks. Major indices roughly flat, other than the S&P and IWM, of course. Nasdaq, I was kind of referring to, roughly flat. Interesting to see ARK up 2% today, while you have Dow, IWM, and SPX down over 0.5%. Same with Qs. Qs are relatively flat as well. I think one of the main stories and what we can look at, especially once we get into the charts, is DXY going over 101, continuing to truck. And so excited to dive into some of those charts as well as ApeCoin. One of the crypto OGs, Kobe, one of my favorite Twitter follows, wrote an interesting piece on ApeCoin and the death of staking is the title of that. So I think it's really interesting. And ApeCoin has been in the news, been pumping this week a little bit. So I'm excited to break that down and talk about it as well. How are you doing, Monty?
Yeah, doing well, CJ, doing well. People love to talk about ApeCoin, and I haven't read that piece yet, so excited to hear you break that down for us. But I think a good starting place is the DXY, like you said, because just a few days ago, I believe on Wednesday, everyone was looking at the DXY, hoping for a top and injecting some capital back into the risk on assets. That led Bitcoin to, make a charge up to 43K. Now we're pulling back as the DXY climbs above 100. What are you seeing when you look at the DXY from a charting perspective?
From a charting perspective, I still think it looks overextended. However, that doesn't really matter based off of Powell's comments and how the market just really went into a downturn. While we are overextended, these divergences can maintain for some time. They can make perhaps 3 lower highs. We have 2. After 3 lower highs, then it's very high probability from a technical perspective anyways, that you're starting to get kind of a retracement. But of course, the DXY is not just the dollar. It is the dollar weighted against a basket of other currencies. One of those currencies, namely Japanese yen. And so you can really see some of these mega trends in the FX market, and a place to look for a clue in when the DXY could change is yen. And as you can see, I mean, this trend has just been profound to the downside. It's a hockey stick down, so to speak, over the last month. But, trends like this are unlikely to last forever, especially when they're so steep. So that's definitely a place to look if we begin to see a reversal in something like the yen or other prominent national currencies, and it brings the DXY down a little bit with it. Then that's probably something that we'll see carry over to some of the risk assets. Something that's interesting is that yields are down a little bit today. Still doesn't look anything notable in the grand scheme of this trend. Nevertheless, something to watch for there. Anything else you'd like to mention before we get into Bitcoin indices and some other stuff?
Yeah, I'm just going to transition into Bitcoin here. But, one thing that obviously has been a defining factor in these markets over the last couple of weeks has been that inverse relationship between the price action of risk on assets and the performance of the DXY. And I think that, despite the fact that the DXY is continuing to climb, Bitcoin is pressing up against these critical levels. And I think we'll see an alignment between these events. When we see the DXY pull back, that is when we'll see Bitcoin finally get above this 20-period smooth moving average and make a run back up to the 200-day moving average. That's what we saw in the past. When we broke above this 20-period smooth moving average, that was on the back of a relatively flat DXY, and that led to some price action that carried us all the way up to 48K. Since this point, since about the end of March, first day of April, the DXY has been on fire, and as a result, Bitcoin has pulled back hard. But still, I think it is obeying the technicals. And I think looking at it from a technical perspective and in conjunction with the performance of the DXY here, you can see we've basically gone up straight from this 20 period smooth moving average. Like CJ pointed out, we are looking overextended. So I am expecting, an eventual pullback to this 20 period smooth moving average at least. And when this happened, like I said, this was on March 28th. Last time this happened, that did lead to a catalyst for positive price action for Bitcoin. It was Bitcoin's best day in the last, month and a half here. That came on the back of poor performance from the DXY. So I think we'll see a similar thing here going forward. And, we also have these nice breakout levels to watch. And I think that, using these moving averages as targets and positioning yourself in relationship to the performance of the DXY is probably the best and most accurate way to play this market going forward. So essentially for me, it's simple. First I'm looking for a turn down in the DXY. We're not getting that yet, still ripping up. But if we do get rejected at this, level, fail to make a new high, that is worth noting. And, then we'll see Bitcoin. If that does happen, we see the DXY get rejected here. We will likely see Bitcoin climbing up towards this 20 period moving average. And I'm just going to wait for a clean break and candle body close above this level. As you can see, we almost got it yesterday, did not get that, got rejected and came back down. But as you can see in the past, this level has served as sort of a breakout level and allowed for positive price action to continue once we've gotten above this level. So I think that's a realistic, target. This 42K level, I think it actually could be breached as soon as this weekend if we, stop seeing the traditional equity markets weighing on the crypto market. But last thing I'll say is that ETH is in a very similar situation here. Still consolidating below 20 period smooth moving average. Also ran once it got above that and got rejected the 200-day moving average. So I really think you could play these the same way. And I think a great way to do it is just watch for weakness in the DXY. So that's kind of how I'm positioning myself right now, at least with Bitcoin and ETH. But I think that, it's been pretty evident that the DXY and that inverse relationship with Bitcoin has been one of the largest driving factors in the market of the last 2 weeks.
As well as the Qs. And I mean, it's all interrelated. But I think the primary takeaway is just that traditional markets and global macro is driving Bitcoin now more than it ever has. But on to ApeCoin and the death of staking. So ApeCoin awards, basically it gives more ApeCoin to its community members who stake their ApeCoin. Now, staking used to mean something, and now it's kind of got these words that are intertwined, and I'll explain what I mean by that. So, with proof of stake networks, long ago, Purecoin was about the first one to create this. But essentially, instead of proof of work, where you're performing work to verify the network, you're staking assets or coins in order to verify the network as a result. However, when you create an ERC20 token or any type of token, whether it be on BNB or on AVAX or Solana, it doesn't need to be staked to validate its network, because the coins like Solana or AVAX or Luna, those are already being staked as the primary layer ones that need validation. ApeCoin and other ERC20s or Avalanche tokens or derivatives of those L1s don't need staking in order to verify the security of their network. So why do they have staking to begin with then? Well, this is a funny tweet. There's some really great memes in this article as well. But basically, from DGen Spartan tweets, we call it staking, but actually it's not. It's just rewards for not selling your coins so that I can do it first. That's basically what it's turned into. And so you get this conflating notion between, legitimate proof of stake networks, like what Ethereum is going to become, what Avalanche and Near already are. And, there's a reason for the staking. So basically, in a lot of DeFi protocols and in general, these staking rewards don't really do anything other than just dilute the entire supply. And so basically what Kobe goes on to argue, or his point that he proposes in this, is that there's $2.6 billion of new ape tokens or new ape coins that are going to be given out from the ecosystem fund over the next 2 or 3 years. The total fund is around 7 billion. But the point is, you don't really need to just give people tokens, because basically what it amounts to is a bribe not to sell their Bored Ape yachts, or all of those types of NFTs that have become so popular. So that's really interesting. And then he goes on to propose a couple other ideas about how it could be improved, or how that $2.6 billion could have been spent, um, because that's a lot of money. And giving it away as a bribe not to sell doesn't have long-term like viability. A lot of what he goes on to say in this article as well is that when you have a $7 billion treasury, you should have a long-term 10, 20-year sustainable plan of how you're going to turn that $7 billion treasury into $100 billion. And giving away 2.6 of it in the next 2 to 3 years just doesn't seem like a uh, like wise thing to do in the long term. And that's a lot because crypto, especially shorter term speculators, aren't thinking 2 years out. They're thinking 2 months out, if that. So I think it's always important to understand the purpose of staking in any type of project. Obviously, in proof of stake networks, there's a valid reason for why you need it, but in projects like ApeCoin, there's not. It's just a bribe not to sell as of now.
Yeah, that's a great way to put it. I mean, when you think about something like ETH and like the role that staking plays in that network, it is in order to maintain the security of the network. But with something like ApeCoin, it does definitely give the impression of, it wants to create, a more, I mean, when you think about what these NFTs are, they are highly illiquid. These people bought them early. They have extremely high price floors, which is kind of indicative of high demand. But, no one's going to buy a Bored Ape for, $1.2 million, but they may invest in the token, at least from a retail perspective. So that just seems like a play to kind of capture some retail capital that was otherwise kind of cut out from the market by high prices. So that to me is just kind of a disingenuous application of staking, but that's something you'll see a lot in crypto is kind of the bastardization of like traditional financial terms into just whatever they want them to be, not necessarily what they were originally meant to mean. So yeah, but thank you for breaking that down, CJ. Good stuff.
You got
Anything
anything else
else?
you'd like to share? I got one more chart, or a couple more charts, but
Yeah,
um,
go ahead and dive into your charts. I got a few more things, but I'll let you go first.
all right. You'll have to give me one sec. I'm pulling it up.
Yeah, for sure.
Yeah, this is an on-chain chart. Has to do with liquid supply shock, and just something that Willy Woo had shared, kind of from the bullish perspective, or why he thinks Bitcoin is kind of undervalued at these prices. Has to do with highly liquid supply shock and that oscillator of what we've seen historically. I think the one thing that you have to take from this, and the same goes for like support levels. It's like when we're below this like bear market resistance band on the weekly chart, like when momentum is down and we're below this level, support levels are they're kind of like a meme. They don't really exist, except for shorter term interim bounces like that. Many times, even myself have pointed towards 45K support, 42K support, only to then continue to lose it. And another thing that we saw is just the rejection from this level very strongly after yesterday. And that's just not typical of what you want to see in the start of a new bullish uptrend. Being said, I want to transition now back to this particular chart and look at some areas of time in which we've been so-called, undervalued based on highly liquid supply shock. And I think that you have to take into account where we are in the broader market cycle. There has been times throughout Bitcoin's history where we've been in these oversold levels and have still gone on to create lower lows and have bearish price action. So I'm not saying we have to. I'm just saying we have to prepare for that type of situation. Say if we lose 39 or 38, and then I'm more concerned about like traditional markets, the Nasdaq. If we continue to make lower lows and are unable to bounce, I know the Fed's comments yesterday put a shock into the market, and typically that always will not always, but typically it will carry into, the last day of the week of trading. Um, Nevertheless, we are hitting these oversold levels. And, the only other time we've really hit these levels was the bottom back in the, you know, roughly the summertime. So very interesting, but I still think you have to take this chart with some context of where we are in the broader market cycle. Um, Nevertheless, this is the lowest record we've ever been, based on highly liquid supply shock. So just something to take into account there. But I am a little bit more concerned on the Nasdaq. Just like, we talked about the potential of an inverse head and shoulders pattern, but now the validity of that is basically negated because we've made lower lows in price. And it looks like we have kind of a higher likelihood to continue to the bottom of this range at roughly 12,600 at this current point. Now, of course, if we get a bullish engulfing on Monday, that can change the tone a little bit. However, as of now, it does not look like this inverse head and shoulders pattern is playing out to the bullish upside. Last thing I want to mention on Bitcoin in terms of critical support has to do with our clouds and this level. So we are officially starting to lose the Ichimoto cloud support after being rejected yesterday. So just something to watch for there. But yeah, not ideal from the bullish perspective. Any comments or anything else you'd like to bring up?
Yeah, let me add some little positive news here because that was a bit of a bleak ending with that Ichimoku support. But yesterday, and we talked a little bit about this in the dispatch. If you guys, subscribe to our crypto newsletter, we talked about this yesterday. But Morgan Stanley published a report about Bitcoin, and they came out very, very bullish. And the report goes into a few different reasons why. One chart that I found particularly interesting is U.S. homes priced in Bitcoin. As you can see, the median home priced in U.S. dollars has gone up year over year, not surprisingly. But if you look at that same chart priced in Bitcoin, it is falling off a cliff. This was actually shared with me by our good friend Nod. Shout out to Nod. If you guys are in the chat, you're familiar with him, but thank you for sharing that with us. But also in the report, they go into about how the Lightning Network is well suited for microtransactions, actually better suited for microtransactions than even debit cards. So as a payment rail. And I found that to be very, very interesting. So Morgan Stanley published a bullish report on that. I'll put the whole report in the chat for you guys, but definitely recommend checking that out because they highlight some very interesting points in there. But ultimately, they come out as very bullish in the long term. And that is reassuring to me to have a bank, a financial institution like that, recognizing the potential as crypto beyond just a store of value, but also as a currency as well. I think that is very exciting stuff. So that's all I got for today. Any parting words, CJ, before we wrap things up?
No, just thank you guys for watching. Hope you have a great weekend out there wherever you are in the world. If you like what you saw today and enjoy this content, please consider liking and subscribing. Helps out us and the channel quite a bit. And if you'd like to get access to our weekly newsletter, as well as our trade ideas and portfolio allocations, as well as our analysis every single day, you can check out the link in the description below at marketrebellion.com/try crypto. We really appreciate that, guys. Once again, hope you have a great weekend.